Welcome to the Mid-Market Edge podcast, where we uncover operational insights for private equity-backed portfolio companies. I'm your host, Kevin Bonfield, and over the last 30 years, I've had the privilege of working with fast-growing entrepreneurial teams, helping them scale, tackle challenges, and seize new opportunities. On this show, we'll talk to industry experts and seasoned leaders who will share practical strategies to drive growth, boost efficiency, and create value in the mid-market. Get ready for an insightful, engaging conversation that dives deep into the real-world issues facing your business. I want to welcome Oliver Cohn today to the Mid-Market Edge. Oliver is one of the leading lights of Bulkley Capital, and I've gotten to know Oliver over the last couple of years with the Association for Corporate Growth. And so as we were talking about preparing your business for transition, I thought that Oliver would be a perfect person to sit down with and chat to. Welcome.
Thank you, Kevin. I'm very happy to be here. I'm a big fan of the podcast. I've listened to every single one. I'm pretty sure this will be the only one I do not listen to, but otherwise, you've had some great guests, and it's been really interesting to hear from people who have been in the driver's seat at some of these impressive companies that I've heard about in the last couple of groups. So thank you for having me.
Oh, my absolute pleasure. And I heard somebody who'd been on before making a comment about it's weird hearing your own voice. Is that the piece that you're talking about?
Every time I'm on something or, I do a speech somewhere, I do not like hearing yourself. It's strange.
It's fair enough. Whatever it feels like coming out of your own head, it does not sound like when it gets played back, right? Okay. So Oliver, tell me more about your role and the way that you work with companies that are going through that transition phase.
Yeah, certainly. So Bulkley Capital, we're a boutique M&A advisor, so essentially a broker for businesses, as you might have for real estate or your house. Firm's been around about 40 years. I've been doing this since 2001, so 25 years, following a little bit of time on the venture capital side of things. But what we do, our clients are founders of businesses who typically, I'd say 99.9% have not been through a transaction before. So we are used to this being a new experience, a very large deal in their life, someone who's built a business over the course of 20, 30 years. And for whatever reason, now is the time to look to take chips off the table or to sell entirely. And we will help them get ready for that process, help position the business in the market, importantly determine where we're trying to go, who the appropriate and viable buyers are. And we're obviously out there representing our client in discussions with potential buyers and eventually negotiating an actual transaction and quarterbacking pretty much the whole process from initial conversation to them getting the money in the bank.
Oh, that's awesome. So when they first come to you, I mean, you talked about founders who have been working in these businesses for decades, right? This is their baby. This is a big part of their net worth. How does the conversation first start? Because I would imagine that they're both excited and a little nervous about moving through this process.
I think that's certainly correct. And so if you step back and think about why are they talking to us in the first place, lots of reasons for that, which are very good reasons. I think, at some point in your life, when you first start a business and you're growing it, you're all in. Everything is your time, your money, your risk is on the table. At a certain point in life, you realize, that's not smart. It's time to not be the owner in that sense. There may be opportunities to grow the business, but they require borrowing more debt or investing some of the cash flow back into the business, going in another direction and opening a new location. So just taking on more debt. And we all get to a point in life where we're about conserving what we have versus putting it at risk, right? So conservation of wealth versus building of wealth, I would say. And so most of our clients have reached that realization. It's time to diversify their net worth, having the majority of their net worth, which is what is the case for most of our clients, having that all tied up in one stock, a business, a stock that you can't just go out and trade on, fidelity tomorrow, is a bit limiting and puts a lot of risk on you. So, you've reached a point where it's time to take chips off the table, think about estate planning, think about what you're going to do with maybe the next phase of your life and or career. And so, they come to us with that's the general idea. But most people, as I mentioned earlier, have not been through this before. These are not serial, buyers and sellers of businesses. They're not private equity professionals. They are people who have founded a business, oftentimes through happenstance or seeing a great opportunity with a customer. And it's grown probably bigger than they ever thought it was going to grow. And so now, what do I do from here? Where do I go? And that's where we get introduced. They're often asking their wealth manager or their attorney or their accountant, who should I talk to about this? And so our role, first and foremost, is to explain, how does that process work? And to the point of your podcast, I think, what makes a successful process versus one that doesn't go so well. And I would say, big picture to think about, this is not like selling your house, right? I mean, I think when you sell your house, put out a sign, just see who shows up and, take the best offer, presumably. With a business, you actually have the ability to really chart the course, set your legacy, make sure you're putting the company in the right footing, doing all the things that are important to you beyond just the valuation, beyond the purchase price, right? And that's kind of a luxury that business owners can have. I've heard people on your podcast talking about going through a transaction, finding a buyer or investor that they really thought was the right partner for them and enjoying working with them and feeling good about handing off the business to them. And that's not really just a 1 in a million situation. That happens with almost all of our clients. It's amazing when you put the right people in front of them, you've told the right story, and you have options as a business owner, and basically, you're in the driving seat as to who you're going to do a deal with. It's remarkable how many of our clients, out of 6 or 7 meetings, which is a story I heard on one of your podcasts, 6 or 7 meetings, 1 or 2 rise to the top. This is who I would like to do a transaction with. And that is the opportunity you have if you prepare properly, your company is saleable, you're ready, and you've got your ducks in a row.
But that process of getting ready to go through the process can and should start presumably before they engage with Bulkley and with Oliver.
And you can put this into the whole field of exit planning, right? I was at a conference last week and someone said exit planning happens either at the kitchen table with the family business, around a conference table, or it happens in a hospital, or even worse, at the funeral home. Okay. Right. So if you're not prepared, the earlier you think about exit planning, the better the process will go. Obviously, a lot of our clients come to us and they've made a decision, or maybe someone has approached them as a potential buyer, and time is a little bit of an essence, and we're dealing as quickly as we can to move forward. I think in an ideal world, someone is thinking about this for years in advance, positioning the company, surrounding themselves with the right advisors, that it's not just people like us to get the company ready, but people on the personal side to make sure they know what they want to do and what they're going to do after a transaction, and people that can help improve the checklist that a buyer is going to think about when they look at a business. The more boxes you check, the better the outcome.
Exactly. So when somebody arrives and they're well prepared, what kinds of things have they already done which makes I'm going to say your life easier, but it's less about that. It's more that the process is going to be one which is a net positive for them as they go through it. What do they have to have done, thought about by the time they come to you?
Yeah, that's a fairly long list, so be ready. I think of it in a couple of ways. One, what hurts a process, the downfall of a process when you're out in the market is losing momentum, the buyer finding out negative aspects that we weren't aware of before, and potentially, a loss of trust between buyer and seller, and which may come about from hiding things that you knew, or taking too long, or not answering questions and being transparent, right? All of those things can be addressed by preparing properly in advance, right? So it comes down to, being ready to answer questions so that you can maintain momentum, knowing and being confident in what you are selling, right? So, for people in my shoes and in the M&A world, generally that number one thing is financial results, and making sure that those can be relied upon, that the buyer is not going to find inconsistencies in your numbers, or things that are not correct, that are going to lower the earnings of your business in their eyes, and therefore lower their view of value. You don't want that to happen. So you want to know that you're, sitting in a strong position when it comes to your numbers, that they're going to live up to, and, be able to withstand the buyer diligence when that comes. So basically what we do nowadays is kind of seller diligence on the front end, do what's called a quality of earnings report, just kind of looking into, proving out accounting practices, revenue recognition. Are you doing accrual accounting versus cash accounting? What is your EBITDA truly if we strip out all the owner expenses and extraordinary items that are in the numbers? Those kinds of things.
Yeah, the quality of earnings it always strikes me as something which is so like nuts and bolts, logical spreadsheets, right? But there's a lot of emotion which is built up in that, because yes, there are add backs. Yes, percentage of completion accounting. Gosh, I've not met a percentage of completion accounting issue which has ended particularly positively. But you've got this logical piece, and yet there's a lot wrapped up in it, kind of like when you're selling a house. I thought that it was worth this, but now that I've done the Q of E, it's actually worth something else. And it has an impact on trust from the buyer perspective, but it also has an emotional impact, I see, on the seller.
Absolutely. We had a client a few years ago that had tried to sell a couple of times without an intermediary, without someone like us, to a logical strategic buyer that he knew very well, who had approached him. And so he did not do any of this preparation in advance, and did not, check out or validate his financials before he gave them to them. They come in, they bring an accounting firm, does the quality of earnings report, and, as we've seen many times, and I don't think it was, necessarily playing games. It was, we made you an offer. We shook hands on an offer based on us thinking you had X in earnings. Turns out you actually have Y. We still love you. Which maybe we don't love you quite as much. And so our number is, is changing, but we still want to do a transaction. Now, from a seller's perspective, who really hasn't no experience with that process, and a lot of it is in the weeds of accounting standards, there is a hesitation there. There is a feeling, after hearing lots of stories out there at the country club, that, maybe this was their plan all along, right? They grabbed me, they got me locked up on their exclusivity, and now they're, putting something in a black box and telling me I'm not worth so much. And there's a complete lack of trust there. Very hard to recover from that, especially when they're dealing directly, whether it's because they truly believe they're being taken advantage of, or their ego, or they'd already started to spend the number that they thought they were going to get. Right. So we had this client that did that, went down the road, and, good for him, pulled out of that transaction and said, I'm going to recoup, do it properly this time. We got introduced by their coach and their executive coach, and then kind of did it properly with a quality of earnings on our side and the full 9 yards in terms of preparing and, some of those other items in the checklist we were talking about.
Yeah, the sell side Q of E, I tend to get I get the sense that actually a sell side Q of E is something that you should always do, because number one, it helps you lock in what the actual value of the asset is. And then the other is it gives you the backup to be able to answer all of those questions that a buyer is going to ask. And to your point, to continue and build that trust and relationship during the process.
That's correct. And, it actually can end up taking weight off the management team and the owner when it comes to the actual process. You do this hard work with lots of questions and lots of back and forth when it's a friendly face, when it's someone on your side, and before we're in the heat of the kind of process out in the market. You understand how to run those reports. We know where everything is at that point. So yeah, not only do you have a defendable number that hopefully is not subject to change going forward once you're dealing with a buyer, but when it gets to the buyer's diligence, our experience has been that, it really lifts the weight on our client when it comes to the buyer's diligence. When we didn't do sell-side QRV reports, the buyer's accounting firm would come in, they'd spend several days with our management team, they'd ask for lots of information, there'd be lots of back and forth. Since we've done sell-side quality of earnings, they talk to each other, right? Our advisor and theirs, and it's really checking how did they do it, make sure they understand, see if there's anything they missed, and if there's really any questions, it typically is dealt with between those two professional firms. And our client maybe is running some updated reports, but they already know how to do that. And so it's a huge. I think it's a huge and a very important thing to do as part of the preparation. Now that's when you're getting close and you've decided you're going to go to market because you're going to do it for the most recent kind of 2 or 3 year period. But taking a step back from that is preparing so that you can do quality of earnings, which goes back to those internal accounting processes and making sure you're doing what you need to do there.
Yeah, as I look at it, I see companies that are getting ready, and there's things like accounting is a big deal for some founder-led companies. Having the business in a format where the founder or the CEO is not the center of everything, like every decision has to come through one person, because then it doesn't feel like you're buying an asset. It feels like you're buying a person and their job, and they could be gone in short order.
Absolutely. I think that's the biggest thing you hear about. If I was to write a checklist of, what should you do? There's that saying about, working to make yourself redundant if you're a business owner. And in some ways, that's a great objective, right? Even if you don't sell the business, gives you a lot of freedom to focus your time on the stuff you really want to do and where you can bring the most value, to the extreme of playing golf every day and just receiving the distributions. But most of our clients, what they really like is thinking strategically about the business and moving themselves kind of above and out of the day-to-day operation management. And so, yes, you want to build a team with depth. You want to certainly know if someone isn't already taking over the roles and responsibilities of the founder, who is ready to do that and is qualified to do that. It goes back to, what I would say, the best way to think about it is you're preparing your business, and whether that's over 10 years, 3 years, 1 year towards a transaction, what is going to drive value? What are buyers looking for? What will they pay for? And really, it is most fundamental, specifically financial buyers, but, really anyone. You're balancing growth opportunity. How far can we take this business? Is it ready to grow? Is it in a big market? Does it have a good defendable market share? So how much growth is there balanced with, how much risk is there in achieving that growth? And risk then has multiple areas that you need to think about. So owner dependence is certainly one risk, and that's really in terms of who has the relationships with the customers, or knows the business, or can drive vision for the company. Yeah. And then, risk is also things like how predictable are those earnings and those revenue streams, right? And that's why, we see highly predictable businesses like a software as a service business that is charging all its customers on a monthly basis that they've got locked in for 5 years. People will pay a lot of money for that because you can see exactly what's going to happen. So somewhere in between that and is usually where most businesses sit. So how recurring are your revenues? How predictable? How concentrated are they? Do you have like one client that makes up 90% of your business? And, that could be, from a business owner's perspective, who knows that client really well and knows that we provide a really great service and we've had them for 30 years, don't really feel a risk there. But for an outsider who's about to buy the business, if I lose that customer because they loved you or someone else turns up that they like better, that just tanks the whole business, right? If it's a really huge part. So all those risk and I think management, you put that into the bucket of reducing risk, right? If you have a management team that you believe can grow the business, and buyers are always skeptical, right? If I've paid an owner a ton of money and he can do whatever he wants at this point, and he no longer owns the controlling position in the company, even if he sticks around, is he really going to be motivated to help me grow this business? Who I'm really looking at is that next layer of management, the people that are going to be the executive team from here forward. Do I look at them and see a team that is qualified, is ready, has the passion and the energy to double the size of this business over the next 10 years or whatever it is? So yeah, having a management team is certainly a big thing. And then, that management team is part of an infrastructure, right? So, the capacity of the business as a whole to grow and to add value to the owner, that can be systems, it can be people, it can be physical, manufacturing facility. Hopefully there's room to grow before I have to buy a new one or invest in a new space. So yeah, I think you start with, what drives value both in your industry, but also specifically to your business and any business really, and try and work on those things. And that should be your guiding light if you are actually thinking 3 or 4 years in advance.
Yeah, the framing I think is really helpful, Oliver. The way that you went down the path of, as an owner and a founder, I love this business because I love my customers and my team, and it generates this kind of income for me, right? And so one way of thinking about this is, how do I prepare to transition, or how do I prepare for some kind of funding event? But the other perspective that you were outlining is, the buyer is looking at this asset and going, what am I buying? And is the growth opportunity outweighed by the risks that I'm also picking up at the same time? And that's a very different set of perspectives that they're coming with.
Yeah, absolutely. And, it's not very different across buyers, right? I mean, I think it's a fairly natural viewpoint. Buyers come in skeptical and looking to reduce risk and identify the risks, because most buyers are going to go back to someone who is writing the check and say, right, this is why we should do this deal. And if that's a large corporation, the board is going to decide that. If it's a private equity fund, they have, their investors who they're accountable to do the right deal and to make sure that they haven't, swung too hard for the fences, so to speak. So, yes, I think I think that is the advantage of having people that have done lots of deals in your circle of advisors, right? I mean, I think that is part of what we bring to the table, is we know how a buyer thinks. You can tell fairly quickly by looking at a business where buyers are going to try and poke holes. And so the goal is, address those holes in advance if there are any. Kind of supplement your team, build this growth story. Make it exciting to the buyers, the buyer community. I think for me, that the management piece is kind of number one, right? I think that is when we've had clients. I remember a client in Chicago. The owner had basically removed himself to a board position, an owner position, and he had put in place a really top-notch team. Like, they really understood the business. They'd been in place as a team for several years. They had huge pedigrees, and he had made sure they were incentivized to help grow the business. And he made them part of our process from day one. So they were bought in, they could help, and they were just fantastic. You felt so confident bringing any buyer into the room and turning the meeting over to that team, because they knew their stuff and they were passionate and excited about what this company could become going forward, right? That's again, of course, what you've done in the past is great for the owner. For the seller, it doesn't mean anything to the buyer, right? The buyer is going to drive their return through what happens going forward. So, paint a picture of what that is, and how to get there. We had one of our, buyers, especially financial buyers, they always talk about, how do we grow this business? And they want management and ownership's perspective on that. And the last several years in particular, private equity buyers very interested in, are there acquisition opportunities? Can we accelerate growth by, making strategic acquisitions, which, is one of the opportunities that really opens up with a financial buyer, right, with deep pockets. So now you have someone that knows how to do deals, has the infrastructure to help you structure transactions and acquisitions, and most importantly, has the capital to fund them and the tolerance for risk, the risk appetite to take on acquisitions, which inherently are risky and potentially put more leverage on the business, that kind of thing. But we had a client, and they had been in the industry. Their family had owned this business for 4 or 5 generations. The owners had been in the company since high school, pretty much. But everyone else in the industry was similar. I mean, they knew all these other 60, 70-year-old business owners around the country in the same space. And so when we talked to buyers, through them, we were able to say, here's the first 15 people we should go and talk to, and build this from a regional play to a national play. And indeed, when the private equity group bought them, they did all those deals and more in the course of the next 3 or 4 years, very rapidly, with the help of our clients, right, who had identified, we don't really want to sit in the office every day anymore and worry about payroll and insurance and HR matters. But we do kind of we do love this platform. We do want to see it do well. We'll go out. We'll go and meet these owners. We'll bring them into the room. We'll tell them what a great experience we had with you, Mr. Buyer, and make them part of our platform. And I think that was really rewarding over the course of a few years for them to be kind of leading the charge on the acquisition effort by, leveraging all these relationships they built over the course of 30, 40 years. So.
Right. I see a couple of things. One of the things I see is just the acceleration of these add-on, bolt-on acquisitions into into these platforms, and at a pace which is just incredible, right? So we're planning on closing on your business. By the way, we've already got the next 2 under LOI while we're doing this foundational deal. But the other thing, it's an incredible point here about the best leads on add-on acquisitions often come from the platform itself, because they've got the relationships and they've been in the industry for so long, and that is part of the value that you're bringing in the growth story.
Yeah, absolutely. Yes, and it also is very neatly a great way to focus a business owner who's exiting, right? You hear all this stuff. So people always quote some statistic about however many % of business owners profoundly regret selling their business a couple of years after the fact. And from my perspective, I'm convinced it's not because they feel like they sold it for not enough money, or they've run out of money, or that kind of thing. It's not financial. It's what are they doing now, and what is their life like? And you really have to communicate openly about what you want to do. And that's what I said at the beginning. I feel, you put yourself in the driving seat by being prepared and thinking about this every year and getting ready and learning about how to best position yourself so that you can say, I've thought about this is what I want to do. And you run a process, which, by the way, our processes, the people we talk to as potential buyers, they should all fit that objective, right? You don't just go out to the market, you find people that will really serve that objective. And for some people, it's, I want to stick around, I want to stay involved with this company. Those who, either stay involved but don't do a good job about picking their partner, and don't like them afterwards, and don't like life, or weren't really fully prepared for what life would look like, those are the ones that have trouble. Or those who think they have to exit entirely and then don't know what to do and miss that whole life of being involved with a growing business. So I think, some of that example you mentioned about, going out and helping with acquisitions, that's happened with us 2 or 3 times with clients. It's a great way to steer them in that way. And then others, we had another client who was much younger. We had 2 business owners who had founded this business. They were still in their late 40s, not ready to retire, saw a lot of growth opportunities, but felt like between the 2 of them, they were kind of blinkered in terms of their expertise. They'd been in this industry since they came out of high school. They'd grown their own business. They kind of were in a room with each other and were really craving an outside perspective, someone who had been through this before. They put it like, we can throw all these options on the table. We can come up with lots of growth options, but how do we know how to prioritize them? And we really feel like there's a real missing piece there. And so they were determined, and what they wanted to do was to bring in a private equity investor who brought something to the table beyond just capital, because they wanted to stick around. They wanted to continue to run the business, but they were looking for this experienced, basically partner. And private equity, those kinds of private equity groups, they're not in your business every day, right? They're there at a board level. They're there helping you set strategic direction. They're there, when you want to call them on the way home from the office and chat through something you're thinking about as CEO, and how should you think about this, and what have you seen done before. And so they knew. We introduced them to some strategic buyers where they would have been just kind of a bolt-on, a national roll-up in their industry where everyone gets given the same Rolex and is listed as an ambassador on the website, but is encouraged not really to come to the office unless they're called for. And then we went to financial buyers who were going to invest directly with them and partner with them. And they had a very strong preference for the latter, right? That was really addressed what they wanted to do. And since then, they bought in one equity group, grew it for 4 or 5 years, sold to another equity group. And each time, they left a little bit of ownership in the business. So that grew in value because they believed in what they could do if they had the right guidance and support.
Yeah, I've seen friends go through this process as well, Oliver, where they may even start the process not quite knowing, do I want to go with a strategic or do I want to go with a financial buyer? And it's only when you get to meet the options, right, that you finally work out what it is that you really want. But that finding a financial buyer who is aligned with you on what it is that you want to go and get done can be an absolute rocket ship and can be a completely different experience as a founder owner than you've had before, even though you're working with the same industry and business. Absolutely.
New lease of life. It is funny. We do, we haven't really touched on it, but the whole process itself, and especially the diligence, is a grueling process, right, for everyone involved. A lot of questions, a lot of back and forth, and if you're an owner, clearly a lot of stress, right? I mean, this is going to be the big one. When is it going to close? Is it going to close? Am I going to get what I thought? What's life going to be like? But it is funny that through that process, talking again and again about how special the business is and what the growth opportunities are that are available, a lot of our owners kind of fall in love with the business again, right? And so that concept of, I'm going to take 90% of the value off the table, and it's in the bank, and my family and we are set, right? We're not going to worry for money anymore. And all the things we plan to do, whether it's retirement, stuff for our kids, charitable giving, I know that I've got them all sorted now. Now I can carry on. A weight has been lifted from me. I can do all the things that I want to do. I can see my management team grow, my employee base grow, my legacy in this business grow with much less risk on the table. Mm-hmm. And, hopefully, I'm doing every day the stuff that I like doing, not the stuff I don't like doing. And I think that thing about, the management team it's really a compelling opportunity also, right? I mean, I think we do see it's old story, but business owners do care about their teams, and they care about the people that help them get the business to where it is. And to see an opportunity, a lot of those deals we do, through the transaction, there becomes an opportunity for management to have an ownership position that they've never had the opportunity for before. Now, whether that's, the seller gives them some portion of the proceeds, which they use to buy in alongside the buyer, and or the buyer sets up some form of equity plan for them or incentive plan. That becomes a really exciting opportunity for the owner to be able to watch from the sidelines, so to speak, as they move forward, right? So now you give the reins properly to the new CEO and his team. They have skin in the game now. They have a new partner. It's understandable, right? I talked earlier about risk tolerance when you're reaching kind of retirement age. I mean, we've had situations where management, there's lots of things that they want to do with the business that the owner's not really willing to, go out on them for today. Change incurs risk. And if the business is ticking along nicely and providing a very good living, like you mentioned earlier, then why risk that? So a new lease of life for management and for the company could be really exciting. And it is good to watch management teams really coalesce as a team, get excited about the next chapter in the life of the company, and make an announcement, hey, we brought in a partner and the 5 of us management team are now owners in this business and we have big plans and this is going to be great for everyone. I mean, it's a really cool thing to be able to do as a business owner when you can chart it yourself and do it properly.
Yeah, I've seen a couple of examples of that. One a friend recently who went through a transaction and just how excited he was that his management team were getting these significant payouts at the same time. It was a big deal for him, but it was a big deal also because it was a big deal for his team. And then I think you've mentioned one of the podcasts we've done in the past. It might be Bobby Achetu, and he talked about his team went to this new company, and I think it's something like 15 of the 17 people who were the key employees were still there 3 or 4 years later, right, and thriving in this new environment. So there's the idea that part of this is that your team can go and take the next step up as well I think is a big deal.
I think it is, and I think it reflects very well on you as an owner that you built the right team that wants to do that and can do that, and you've built something that can continue your legacy. That's the downside of selling to a big corporate buyer in your industry, right? Is you're no longer an independent player in your space, and there's potentially some risks to employees if there's kind of overlap. But to build something that stands on its own and has value on its own and can then continue with a reduced role from you, I think is pretty special, pretty impressive. Yeah.
Okay, so I thought that this was going to be the case with our podcast, Oliver, but we have sped through the time that we were going to have time together. So I ask this question of everybody who comes on, which is if you were to take your expertise and experience now and apply it back to when you first got started in this industry, what's the one thing that you would do differently given all of that expertise?
Yeah, I think I have become over the years far more insistent on this preparation, right? Of getting you ducks in a row before you go to market. And, someone in my shoes, right? There's a temptation. The quicker you get to market, the quicker you can get a transaction done, the quicker you can get your fee paid. But, I have seen time and time again, how much advantage it is to be ready, to be truly ready and to be prepared, both all the stuff we said before, the checklist of financial and operational things, and then mentally prepared as a person. So I think, my lesson to myself is, take a step back, take a pause, and then address, is the company ready? Is it saleable? Because when you think something is going to be a problem, it usually is in the market. And then, communicate with the client. I mean, you really want to get to the bottom of why are you selling, which is often kind of the number one question a buyer asks, by the way. So you need to be ready on that. Why are you selling? What's life going to look like afterwards? What do you care about? What are we trying to solve for? And I think, that comes with seeing enough situations where people weren't sure, or maybe there was disagreement among different shareholders that came out later, which is problematic. So you really need everyone on the same page. You need to be shooting for a common target, and make sure that's completely everyone's in agreement on that.
Fantastic. Now, if somebody's listening to this and is thinking about going through a transition process or is starting to prepare, how do they reach you so that you can help them?
Yep, you can find Bulkley Capital on the web, and there's a phone number there, but also LinkedIn. I try and be fairly active on LinkedIn, so find me on LinkedIn and reach out that way, and I'm definitely happy to talk to anyone. I kind of love the idea of being able to point people in the right direction, to get themselves ready and their business ready, and learn their business. The better I know a business owner and the better I know a business, the better job I'm going to do at selling it when the time comes. So the earlier we talk, with no meter running, just kind of understanding how I can help, the better.
Yeah, and having known you now for, I think, maybe a couple of years, Oliver, your comment about you are happy to help and connect people is something that I've absolutely experienced with you. So people should take that as gospel.
Yeah, absolutely.
So thank you very much. This was a fantastic conversation. I'm really excited that we got to talk on the Mid-Market Edge.
Thank you. Pleasure. Thanks, Kevin.
Thanks for tuning in to the Mid-Market Edge podcast. For more information, visit the Mid-Market Edge website at midmarketedge.com. Details are in the show notes. Remember to subscribe and like the show so you'll never miss an episode. And until next time, keep building your edge in the mid-market.